and gentlemen, good day and welcome to Shalby Ltd Q2 Financial Year 25 earnings call. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kashish from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Nivedita. Good evening, everyone. We welcome all the participants to the Shalby Ltd Q2FY25 earnings call hosted by Elara Securities. Today we have senior management representing Shalby. Among the senior management participants, we have Dr. Vikram Shah, Chairman and Managing Director, Mr. Shanay Shah, President, Ms. Nishita Shukla, Chief Operating Officer, Mr. Amit Pathak, Chief Financial Officer, Mr. Deepak Anand, Global Chief Business Officer, and Mr. Babu Thomas, Chief Human Resource Officer. We will start with the performance highlights from Mr. Amit Pathak, CFO, and Mr. Deepak Anand, Global Chief Business Officer. After that, we will open the floor for question and answer for all the participants. I now hand over the call to Mr. Jigar Todi for important disclaimers regarding any forward-looking statements that may be made in today's call. Over to you, Jigar.
Thanks, Kashish. Good afternoon, everyone. Our earnings presentation is uploaded on the stock exchange website and our company website, shalby.org. We do hope you have already had the opportunity to go through the presentation. Please note that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. Kindly refer to slide number 40 of the investor presentation for a detailed disclaimer. Now, I would like to hand over the call to CFO, Mr. Amit Pathak, for his opening remarks. Thank you, and over to you, sir.
Yeah, thanks, Jigar. Good evening, everyone. I am pleased to welcome you all to Shalby's Q2 FY25 earnings call. Now I will walk you through the financial performance of the company for the second quarter of FY25. The consolidated revenue of the company is around 275 crore in the current quarter versus 243 crore in the Q2 of the last year. And we have been grew by 12.9% on YOY basis. EBITDA of 39.8 crore in the current quarter versus 58.1 crore in the Q2 of the last year, with a margin of 14.4% in the current quarter and 23.9% in the second quarter of the last year. And our EBITDA has been down by around 31.5% on YOY basis. PBT is 13.7 crore in the current quarter versus 42.6 in the Q2 of FY24, with a margin of 4.9% in the current quarter versus 17.5% in the Q2 of FY24. The revenue for the current year H1, the half year is 563 crore versus 483 crore in H1 of FY24, and we have been grew by 16.5% in terms of revenue on the YOY basis. We are maintaining the healthy balance sheet with a low gearing ratio of 0.2x on the debt gearing ratio. Now I will run you through the standalone performance of the hospital business. Our standalone revenue is 218 crore in the current quarter, is 223 crore in the Q2 of FY24, and it is down by 2.4% on YOY basis. The EBITDA is 40.8 crore in the current quarter versus 57.5 crore in the last year Q2, with a margin of 18.7% in the current quarter versus 25.8% in the Q2 of FY24, and it has been down by 29.1% on the YOY basis. The PBT has been clocked at around 28.3 crore in the current quarter versus 47.3 crore in the Q2 of last year, with a margin of 12.9% in the current quarter versus 21.2% in the Q2 of FY24. On the standalone performance, our revenue has been degrown by 2.4% on YOY basis due to reduction of surgery by 7% on YOY basis. Rajasthan and Gujarat had witnessed a major rainfall in the current quarter, where most of the districts in Gujarat and Rajasthan has experienced heavy flooding, which has resulted in patients postponing elective surgery. This results in a major dip in the surgeries in our arthroplasty business as well as in the other specialties. Our EBITDA on the standalone performance has degrown due to the above reason, which has resulted in higher expenses in proportion to the revenue. On the standalone basis, we continue to maintain a strong balance sheet with a positive net cash balance of 74 crore. With this operating leverage kicking in and growing with asset-light approach, our standalone ROCE is resulted to 15% in Q2 at an annualized basis. Our ARPOB and ALOS has shown an improvement at 38,779 and 3.6 respectively, compared to 36,136 and 3.92 in the same period of the previous year. ARPOB on YOY basis has been grown by around 7.3%. The number of occupied beds increased by over 2% on YOY basis as the occupancy ratio of 49% in the current quarter due to acquisition of Sanar. The payer mix of the current quarter is 36% from the self-patient, 41% from insurance and 23% from the government business. Now from the investment point of view, the further capex will be incurred for the capacity expansion from 130 beds to 200 beds in the coming year for Sanar International Hospital. The revenue of Shalby Sanar is 25.74 crore in the current quarter versus 23.7 crore in the Q1 of FY25 with a growth of 8.3% on quarter-on-quarter basis. The ARPOB and ALOS of Shalby Sanar for the current quarter is around 85,722 and 3.64 respectively in the current quarter. Shalby Sanar is presently operating at 25% occupancy level and it will increase gradually in the coming quarter. In the current quarter, 54% of the revenue contribution of Sanar has been generated from the international patient. Revenue from international patient on the overall group basis is 15.3 crore, which includes Sanar as well as Shalby Ltd. At Shalby, our undivided focus has been demonstrating our clinical excellence through successful expansion of many diverse critical surgeries in several of our hospital units. We also take a pride to share that we have successfully completed 28 transplants, 12 in kidney, 11 in liver, and 5 in BMT during the current quarter. In September 2024, Shalby Krishna Hospital has got a license of bone bank and is successfully operationalized in the ongoing Q3 of FY25. Now, our associate franchisee business has delivered adequate performance in the current quarter. The total revenue from the FOSO business is 2.3 crore, which has been grew by around 14% on YOY basis, and the total revenue from FOSO business is around 1 crore, which is flat on the YOY basis. Our new SOC unit at Rajkot has become operationalized from July 2025 onwards. We have been incredibly selective in our choice of potential partners from many inquiries we received so far. To maintain the reputation of our strong brand, we follow a clearly defined process and strict criteria when making these selections. Looking forward, we have a strong sense of optimism about seeing positive development in the upcoming quarter of this fiscal year. Our primary focus remains on utilizing our expertise and excellence in orthopedics with the goal of establishing more than 40 franchisee hospitals across India within the next 4 to 5 years. For our home care business, we serve 9,000 plus patients in the current quarter versus around 7,800 plus patients in the Q2 of the last year, with a growth of 15.3% patient count in the similar period of the last year. Revenue from the home care business is 3.9 crore in the current quarter versus 3.6 crore in the same quarter of the last year, with a 7% growth on the YOY basis. As part of our social commitment, we continue to spread awareness about the importance of health and well-being through various social media platforms and created 130 plus healthcare videos. We also conducted more than 410 plus healthcare camps and 160 plus healthcare talks across all units during the last quarter as a part of various community outreach programs. Shalby also takes the pride in nurturing young talent through our Shalby Academy vertical with 1,135 plus students registered in various healthcare programs during the last quarter. We also like to inform you that Shalby Advanced Academy has successfully completed enrollment process of MBA HHR program of Ganpat University with 34 enrollments for the academic year 2024 to 26 batch. Shalby Academy has successfully launched first batch of Kaushalya, the university diploma and MSc courses at our premises. Our SAT implant business has delivered minimal EBITDA loss of Rs 72 lakhs in the Q2 of FY25 due to marketing, sales promotion and other allied expenses incurred during the quarter for our upcoming products. Our operational efficiency is improving quarter-on-quarter basis with the optimization of the procurement cost. Shalby Advanced Technology US has delivered the revenue of 27.8 crore in the current quarter versus 14.7 crore in the Q2 of FY24 with a growth of 90% on YOY basis. Now I will hand over the call to Deepak to share insight about our implant business. Over to Deepak.
Thank you, Amit, and good evening, everyone. During the second quarter of this financial year, our implant business made significant progress, generating revenues of 27.8 crores, which is a growth of 90% on a year-on-year basis, with contribution from the US and OUS at 30% and 70% respectively. The total constructs sold has grown by 46% from 2,174 units to 3,184 units in Q2 financial year 25, and it's grown by 85% from 3,585 to 6,644 in H1 of financial year 25. The average cost of goods manufactured per component has decreased by 30% quarter-on-quarter basis and 35% year-on-year basis. We are actively focused on bolstering our team with skilled professionals, transitioning our sales mix to retail customers from wholesale, enhancing operational capacity and efficiency, expanding our product pipeline through extensive research and development efforts, and significantly reducing procurement costs. The reception of our Shalby Advanced Technology implants in hospitals across all markets that we have launched has been highly positive, and we have received additional orders from the Indonesian market. With our key strategies firmly in place, our team is fully dedicated to executing these plans flawlessly. Shalby is well positioned to achieve double-digit growth with sustainable profitability while also expanding and deepening our presence by opening up new geographies. These efforts will ultimately drive the creation of sustainable value for all stakeholders at Shalby. The 4 different pillars that we've been focusing, let me speak about each pillars quickly. The first pillar being sales. The growth of sales has been 90% over the last quarter and 8% over the previous quarter. In Indonesia, we have surpassed $500,000 business already in the first half of the year. Response has been extremely great, and we'll be adding more surgeons in time to come. India business is at a growth of 115% over the last quarter and 91% growth over the previous quarter. We've added more than 18 people in the team in India and about 5 distributors in this quarter. In the US business, we've added 5 new customers as well as onboarded 7 distributors in this quarter. We are looking at Latin America, 5 countries in Latin America, Russia, Iran, Malaysia actively as our next growth phase, along with expansion in Japan. When it comes to cost reduction, our cost of goods manufactured has gone down by 30% over the previous quarter, and we're currently at $77 against $109 of last quarter. This has been done by changing vendors for raw materials and increasing our capacity in our plant. From a capacity increase standpoint, which is our pillar 3, our plant has significantly grown its manufacturing capability. Where we were manufacturing approximately 2,700 components in April, we've been able to manufacture 7,500 plus components in September. This has allowed us to produce more to take care of the demand in the market as well as drive the cost of goods down. Looking at more new vendors for raw materials coming on board in Q3 and Q4, we will have a good capacity soon to expand for global business. And the last pillar being our new products. This team is working not only for the current day but also for the year and 2 years down the lane. So we have established that India and we have started hiring engineers. We have more than 15 engineers who have been hired across the globe in this quarter. And we have also looked at strategic partnership for some products for India and Southeast Asia, which will drive growth for some of our new products like G21 bone cement in partnership with Italian company. So that's it from my end. Thank you, Amit. Over to you back.
Thanks, Deepak. So I request the moderator to open the forum for the Q&A.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajesh, is an individual investor. Please go ahead, sir.
Good evening, ma'am. Hello.
Good evening. Hi, good evening.
Hello. Good evening, sir. Greetings of the day, sir, and wish you a very, very happy Diwali, sir.
Thank you.
Sir, my question is there any plan for raising equity capital to fasten our growth of our company, specifically for aggressive growth, specifically in Mumbai and NCR region, or any plan in future to hive off this implant business and focus more on our more lucrative business, which is hospital business, which have more secular growth and have higher margins?
So, thank you. Just to answer your question, in terms of the hospital, we are not looking for any kind of equity infusion right now, because our cash position on the standalone basis is suffice to take care for our expansion for Delhi as well as Mumbai location. Apart from that, our balance sheet is so strong that we can raise the further fund from the banks. We don't have the cash liquidity issue. So that will suffice if we require to invest somewhere apart from Mumbai and Delhi. So our balance sheet is sufficient to take care of that. Now, in terms of the implant, you can see the implant, we have already started the story that implant will grow in the coming years. In the current quarter, you can see there is a 90% growth in terms of the top line. And as we will progress in the coming quarter, implant will start delivering the profit. And in the coming years, it will deliver the higher double-digit profit. So it is a profitable venture for us, and there is no possibility that we will look forward for any kind of hive-off for that.
Okay. And sir, if we have any plans for any aggressive inorganic growth in Delhi NCR region, because it is a very big area and very lucrative as far as hospital business is there. Because if you see the average revenue per bed in NCR region is very lucrative and very high margin business is there in Delhi NCR, and there is lot of opportunity here, sir, also, like in Delhi and Noida and Ghaziabad and this Faridabad, and they have very ample opportunity for our company. If we have any plan, aggressive plan in Delhi NCR and in especially in Delhi NCR and Mumbai region, because they are very lucrative as far as this business is concerned.
We have already started putting up our footprint into the NCR, and Bombay is already in plan, and we are always evaluating the right proposition what we have. So whenever the good opportunity will be there, we will evaluate. But right now, whatever we have in our hand, we have briefed to the market where we are moving on.
Thank you, sir. Thank you so much, sir.
Thank you. The next question is from the line of Rohan from Invention Capital. Please go ahead, sir.
Hello, am I audible?
Yes, please.
Yeah, thank you for the opportunity. So, my first question was on the surgeries that got postponed because of monsoon in Gujarat and Rajasthan. So, are we seeing spillover in the month of October? How has been the response? And do we see the growth coming back in this quarter based on the spillover of the last quarter?
So in terms of the growth, we can see except this quarter, if you can see YOY basis, all the quarter we have delivered the good reasonable amount of growth. Okay. So this quarter we expect the growth will be in the similar line, but we cannot comment right now because quarter 3 just started. We have to see how the things are going on.
Just to add to that, in the month of October, from what we have seen, we definitely see growth and, that spillover effect coming in this quarter, despite 3 or 4 days of the month being impacted due to the festive season of Diwali. So we definitely see that. In fact, even in the month of November, there are a lot of surgeries lined up in, 2 of our flagship units. If you compare it to the previous quarters, or if you compare it to the same quarter last year. So the quarter 3 is expected to be, quarter 3 and quarter 4 will see the spillover effects of quarter 2.
Got it. And sir, my second question was on Sanar. So, while we've started operations with 130 beds and currently at 25% occupancy, so what could be the idea behind scaling up it right away, and what is the kind of timeline that we are looking at Sanar scaling up to an occupancy level at hospital level of 50%?
Sure. So Mr. Naresh Kapoor is also part of the call. He takes care of the North cluster for Shalby on the hospital side. So I request him to take that question.
Hi, good evening, everyone. On your question regarding the expansion, so typically right now the expansion plan is on the drawing boards, and once we have finalized that, then it will go for the permissions and everything. And in my opinion, it would take roughly about 12 months to 18 months to complete once we apply for permission and we get the permission, etc. So on your question that since we are operating at 25%, so we see in coming quarters the occupancy will grow, and as the occupancy grow, we do feel that within next 12 to 18 months we will be needing enhanced capacity.
Got it. And sir, if I can just one more question here. So basically at hospital level, we've been in this range of 49%, 48-49% kind of occupancy, and we see our peers doing occupancy in the range of 60 to 70%. So what are the drivers that we are looking at? What are the steps that we've taken to scale up occupancy at hospital level, at the company level?
So I think the steps, first of all, I think we have to look at the numbers, slightly differently. So, what happens is that as Delhi Sanar got added, and as Amit also alluded earlier that, the occupancy level is at 25% at the moment. So, at aggregate level, what happens is that your overall occupancy comes down. Because of that. So that's the reason the occupancy numbers in percentage have come down. But if you look at the absolute numbers, we've seen a growth on a year-on-year basis. There is a 12% growth. So, and which is expected to continue. We'll see occupancy growth in terms of absolute occupancy as well as an ARPOB growth of between 4 to 6% that we've seen historically.
Thank you, sir. I'll get back in the queue.
Thank you. The next question is from the line of Kashish. Please go ahead, sir.
Hi, thank you for the opportunity. So 2 questions from my end. The first question will be on ARPOB. We have seen a growth of 7% YOY this time around. So how are you looking at ARPOB for at least FY25, and what will be its growth drivers?
So as we have mentioned, the ARPOB will keep growing on the quarter-on-quarter basis. As Sanar occupancy will grow, that will also contribute into the ARPOB, because the international patient we have the higher ARPOB. So the way we have seen historically, it is growing every quarter 5 to 7% or every year around 10 to 12% on a basis. That will continue to grow.
So adding to him, I'll just like to tell that we are focusing on all transplant surgery, say high-end surgeries, liver transplant, kidney transplants and all, which all are going to give us a good ARPOB.
So thank you. My second question is regarding our payer mix. So if you say our insurance has gone down to 41% from 44.2% last year. So any specific reason for this? As insurance penetration has been increasing, so our competitors' insurance generation from insurance revenue is quite higher. So can you just throw some light why it is so?
Okay. So just to say regarding this, as we mentioned in the current quarter, there is a lot of surgeries has been come down into the Gujarat region also. When in our flagship unit and couple of units, we have the higher TPA business. And in the couple of states like MP, we have a more of the government business. So this time the mix has changed because in terms of this mix, the Gujarat have the lower surgeries and all these things. So that is the reason the PR mix has been changed.
And we have to look at it hospitals-wise specific, because if you look at Jabalpur, for example, if you look at most of the hospitals in the region, about 60% of the number of patients who walk into the hospital out of 100 are CGHS patients, right? So now what happens is that the numbers look skewed because of such kind of hospitals. And then on the other side, you have our flagship hospital where we don't take government patients at all. So you have only self-paying and TPA patients in our flagship hospital. So hospital-wise, it is different, and region-specific as well, it will be different. I don't think it will be fair to compare us with any of our peers, reason being that most of our peers have like for example, if you're comparing us to, say, a hospital which has hospital group which has most of the hospitals in Delhi, the payer mix is expected to be different. I hope that answers your question.
Yes, sir, it does. Understood. Thank you so much. I'll get back into this. Thank you.
Thank you, sir. The next question is from the line of Rajkumar, is an individual investor. Please go ahead.
Yeah, good evening. Can you hear me?
Yes.
Yeah, thanks for the opportunity. Sir, just a few questions. So the first one is on the tax rate. I just want to know what is the guidance, because the tax rate seems to be, even on standalone basis, almost 35%. So is it due to that we are still in the MAT regime?
Yeah, we are not able to hear you clearly.
Yeah, can you hear me now?
Not very clearly, actually.
Yeah, is it clear now?
It's better.
Hello?
It's better.
Yeah. Sir, I just want to know what is any reason why our tax rate is almost 35%, given that the domestic companies pay only 25%. So is it due to that we are still in the MAT regime? Or?
So we are still under the MAT regime. So the MAT will get utilized by the end of this year. So thereafter we will see the impact. So till current year or maybe the quarter one of the next year, the MAT will continue.
Okay. Yeah. So then the next question is, this new insurance scheme introduced by PM, this is the Ayushman Bharat for senior citizens. I just wanted to know will we get any kicker out of this, because it's targeted towards the senior citizens, and given that a lot of senior citizens have bone-related issues. So shall we get any kicker because more people will be covered and more people will opt for surgeries? Is that a fair assessment?
So, at the moment, so if I've understood your question right, because, your voice was a little blurred, but basically, it is fairly early to comment on this right now. I think, we have to let a few weeks, a few months, pass, and then I think at that point of time, we'll be able to better comment on the impact of this change.
Okay, but at a ballpark level, is that a fair assessment from an investor standpoint, that can we expect there'll be some uptick in business?
Correct me, but because only 2 hospitals are
See, out of the hospitals that we operate, only 2 of the hospitals are Ayushman Bharat empaneled for us, right?
Okay.
So for us, any which way, the impact will be very minimal. For the rest of the hospitals, I mean, we are unable to kind of give you an assessment of the overall impact. But I can tell you for us, it won't be a significant impact.
Okay, got it, sir. And lastly, one housekeeping question. So these other expenses on a consolidated basis, I see almost 34 crores reported current quarter, which is almost 50% jump year over year. So is there any one-off in this line item?
So there is not one-off. If you compare to the last year quarter two, we have not consolidated Sanar. So Sanar expenses are coming into the place. Apart from that, as our implant business is growing up, so you can see there will be some expenses around that. On the standalone level, we don't have much of the increase except 1.5 crore. The rest of the impact is the addition of Sanar and the implant business. There is no one-off.
Okay, because even compared to June quarter, it has gone up by almost 7-8 crores.
So compared to June quarter, if you will see that I have mentioned, in the implant, there is a growth in terms of the top line also. In terms of standalone, there will be some increase in the cost, okay, and the other entities also there is an increase. So that is impacting there.
Okay. And sir, any guidance on the return on equity that you are targeting for FY25-26 onwards? Because I know that a lot of acquisition that has happened this time in implant business is getting stabilized. So I just want to know from 25-26 onwards, what kind of return on equity we are kind of expecting.
So you can see in this quarter we have shown around 15%, and prior quarter you have seen the 18%. This quarter was slightly exceptional, you can understand, and we have contributed always higher on the return on equity. Every quarter it is growing. So we can see somewhere by the end of the year it will be around 20% kind of thing.
So this is on a console basis because you are reporting only on standalone basis the return on equity. So I'm asking on a console basis, what is the return on?
So console basis, we will come back to you. We don't have the data handy with us.
Okay. Yeah, because I asked this question last call also, sir. I didn't get a response. So that is the reason I would appreciate if you could email or,
Have you reached out to Jigar Todi, our investor relations?
No, not. So, okay, yeah, I'll take it offline.
Yeah, so please drop him in. We will share the data with you.
Yeah, thanks a lot, sir. Thanks for that. Thank you.
Thank you. The next question is from the line of Bino from Elara Capital. Please go ahead, sir.
Hi, good evening. Just to follow up on Sanar, what is the level of profitability there, and what is our expectation over the next couple of quarters?
Yeah, Mr. Kapoor, if you could take that, please.
Yeah. Hi. In terms of occupancy, right now, as earlier mentioned by Amit, we are around 25%, and it's growing now. And we expect next couple of quarters it will grow further, as we have got a couple of new doctors on board in high-end specialties like liver transplant, bone marrow transplant, and medical oncology. And also we have got recently accredited by AACI, which is an American accreditation company. Now this accreditation will help us in getting some institutional business from different countries. So we expect the occupancy to go up.
My question was around profitability. What is the EBITDA margin, and how do you expect it to move over the next 3-4 quarters?
Okay, sorry, I heard it wrongly. Maybe Amit can answer this. Yeah.
So you can see Sanar, we are at around EBITDA neutral, and as Mr. Kapoor says, there are a lot of potentials are into the Sanar with this accreditations, and the business will grow, and it's going on quarter-on-quarter basis. In the current year, we are seeing it will be the EBITDA positive in the single digit kind of thing. Next year, it will be on the move into the double digit kind of profitability with the growth in occupancy and the revenue.
Understood. And just to recap, what is the sort of bed addition we are planning there? Currently, it's 180, I believe.
We will add around 60 to 70 beds, so taking the capacity to around 200 beds.
Okay. And will that be for adding any new specialty, or would it be in the same existing specialty?
So specialty bouquet, more or less, we are complete, but definitely we'll be taking up some more additional high-end work like CAR-T-cell, which is in along with bone marrow transplant, which is not being done by many of the hospitals. So we have a couple of patients lined up, and we have recently tied up with the company which is manufacturing the CAR-T cells, and that business will give us substantial revenue. The ticket size, just in case I can mention that, ticket size is roughly around 70 lakhs to 1 crore per patient.
Got it. Coming back to Gujarat, the monsoon impact on surgeries, could you specify which exactly month or week it was in?
Can you just repeat the question?
Yeah. The impact of monsoon on reduced number of surgeries in Gujarat, Rajasthan. Could you tell us which exactly weeks or months it was during the quarter?
It was majorly in the month of July and some parts in the August also.
Okay. So if you look at the numbers, they are comparable in September YOY compared to last year?
Pardon?
In other words, in September, did the number of surgeries pick back up to the normal rate?
Yeah, so if you are comparing month-on-month basis, September last year versus September this year, the surgeries has been grown. The impact which has been there in the month of August and July and slightly in the month of August, that has not been covered totally in the month of September, and we are going to catch up in the current quarter.
Understood. Thank you very much.
Thank you. The next question is from the line of Pinky from Banerjee from AUM Capital Private Limited. Please go ahead.
Good evening, sir, and thanks for the opportunity. Sir, in your consolidated PL profit and loss account, so the gross operating expenses have gone up by almost 25% from 252 crores to 316 crores. So what is the reason attributable to that?
So you are asking for YOY basis?
Yes, for half-yearly YOY basis.
So as I mentioned, last year, first half, we don't have the Sanar into the consolidation.
Okay.
So Sanar has been consolidated into the current quarter. This is the first one reason, and another impact is due to the growth into this implant business, which has been grown compared to last year, which has impacted into the expense.
Okay, sir. And so your debt levels have also gone up by from 313 to 405 crores. So, sir, what is the reason for that?
The reason, if you can see, this is majorly, as you can see, the growth is coming into the implant business. We are investing into the implant. The new product is going to be launched into the upcoming quarter. So that is a working capital utilization mainly into the implant business and some part into the Sanar business. The Sanar is minimal, majorly into the implant business also.
Okay, sir. And sir, one last question, sir. Your tax rate is almost 83% for this quarter, and which was last quarter it was almost 52%. So actually, what is the reason just now? You told us MAT adjustment is one of the factors. Is it the only reason?
No. The reason, if you can see in the consolidation, we stopped creating the deferred tax on our implant business as well as into the Sanar.
Okay.
So that is the reason you can see the impact, whatever the actual tax is coming into the standalone, almost including the other non-substantial subsidies, the tax amount is similar to it is coming into the consolidated, and we are not creating any deferred tax for this implant as well as our Sanar business.
Okay, sir. That's all from my end. Thanks and all the best, and happy Diwali to you all.
Thank you.
Thank you. The next question is from the line of Priyank from Abex Asset Manager LLP. Please go ahead, sir.
Yeah, thanks for the opportunity, sir. So my first question is on occupancy. So what is the sort of peak occupancy our business can have? Hello?
So basically, what we have generally noticed is that, around 70% is the level at which, we can go on a sustainable basis in most of the large institutes that we run.
Okay, so where we see achieving that kind of occupancy?
as I said, we are expecting anywhere between 12 to 15% volume growth, on a consistent basis. As Amit alluded earlier, again, the ARPOB growth will be, our ARPOB growth will be over and above that. So based on that 12 to 15%, I think we get to the 70% level.
Okay, sir. Understood. Sir, I wanted to understand the economics of our FOSO and FOSM business. So, compared to the owned hospital, how much capex we have to do in the FOSM business? That I wanted to understand.
Yeah, I'll just add to the previous question that you said. So basically, some of the newer hospitals, like for example, say the Delhi Sanar Hospital or say Mohali. So within the group, there are many hospitals where the growth will be higher because the occupancy level today is low. I'm talking about a 12 to 15% volume growth in some of the mature units is what I was referring to.
No, sir. From the perspective of the capex and the overall economics of the hospital, for FOSO and FOSM business that I am referring to.
Yeah. So from the capex point of view, for the FOSM business, as the entire this franchisee business, you have to understand is the asset-light model. So FOSM don't have to do any kind of capex. FOSO sometime maybe we have to do the capex in the range of 3 to 5 crore. But that depends upon the situation. But this entire franchisee model is an asset-light model.
So 3 to 5 crore for how much beds we have to do for FOSO?
So it's ranging between 25 bed to 50, 60 bed kind of thing.
Understood, sir. Okay, and
this is also not mandatory. Okay, so that is depend upon what kind of terms we are entering. But max to max is a 3 to 5 crore kind of thing.
Understood. So, I wanted to understand in terms of the accounting part, all the revenue that we earn in FOSO business would be consolidated with us along with the expenses. Whereas for FOSM business, all the revenue we would be having revenue sharing model. Is that right way to understand it?
Yeah. So FOSO you have to understand is a line to line consolidation. Okay. So that is getting added into our standalone performance. The revenue is getting added into revenue, expenses are getting added into the expenses. But for the FOSM, whatever the revenue share we have, that is just coming into the revenue from operation as a management fee. That is that is getting included into the top line and is directly contributing into the bottom line also.
Understood. Yeah. Thank you, sir. That's it from my side. Happy Diwali.
Thank you.
Can we take the next question, please?
Hello, are we audible?
Yes, sir. The next question is from the line of Ronak Kapoor from Elara Capital. Please go ahead, sir.
So I have two questions. So firstly, I want to know what's your overall guidance for FY25 regarding revenue and EBITDA and your capex guidance. And the second question is regarding your implant business. How do you see it in the next FY25 and over the next 3 years?
So the guidance if you are seeing on the overall basis, I'm just segregating into the two parts. One is the hospital business, another is the implant business. Implant has already picked up their speed. We are going to see the higher growth into the coming quarters compared to the last year. Quarter 3 and quarter 4 will be the good quarter compared to the current quarter also. We will go fast for our implant business. For the hospital business, we are always delivering the higher double-digit growth kind of thing, and we are going ahead with the same kind of direction right now.
And I think you should also consider the fact that, the Delhi Sanar Hospital in terms of the top line, was not, we acquired it early this year. So the impact of that was not part of the financials last year. So that will add to the top line, in this particular year.
Yeah. So this year you will see the 12 months of impact of Delhi Sanar. Last year it will be just 2 months. So the 10 months of addition from the Sanar hospital will contribute into the top line.
Okay. And so implant business, like, can you give an absolute number, like where do you see it in next 3 years? Like?
Because you'd like to comment?
Yeah. So on the implant business, we still stick to path of trying to get to the $100 million business by 5 years' time from now. So 2028, 29 is when we see $100 million business coming into picture.
Okay. And so the hospital, you say any absolute number for this year?
So we have just given the guidance on the percentage. So absolute will come accordingly. So I cannot calculate that. We will continue to go on the same direction.
The person you are speaking with has put your call on hold.
Hello. Yeah, fine. Thank you. That's it from us.
Thank you. The next question is from the line of Rajesh, is an individual investor. Please go ahead, sir.
Yes, ma'am. Actually, I would like to ask one question. Sir, if you can give some guidance on occupancy level in the near future, because now onwards, every little bit increase in occupancy level will add to the operating leverage, and the bottom line will be increased very fast if we can have occupancy level increase to 60 to 70%. Would you like to give any guidance on occupancy level when it can reach up to 70% on overall basis, sir? Not on matured hospital, but on overall basis, sir.
So you can see our occupancy on quarter in absolute terms, it is going. We should not see on the percentage terms, because once we are adding the operating bed, the percentage due to the denominator is getting changed. Okay. So from 680, what we have right now, the occupancy, we are going to see the very shortly in the upcoming quarter, it will be ranging between 710 to 730 people.
Okay. Right, sir. Because actually, just wanted to understand, because in case of increase in, because I have read something like the quantum of beds we have, operational beds we have, and the valuation we get from the market is quite different from the industry standard. So if we can increase the occupancy level aggressively, then valuation can be very attractive for us also.
Yeah, feedback noted, but we are working continuously on the occupancy levels. So hiring the right clinical talent across different specialities, so basically what happens is we have to be very selective on that front also, because at times there are doctors that can bring in a lot of top line, but if you're not able to control the expenses, because often what happens is that a huge chunk is taken away by them as doctor fees, or we might not have control over the consumables and the materials. So we have to take a right judgment call at any given time. But organically, if you see, I think the past trend gives a good sense of what it will look like 5 years from now. So about 5 years ago, we were ranging at 300, 330 occupancy in terms of beds, which has now consistently grown, and we are at about anywhere between 650 to 700 today. And this is, mind you, nighttime occupancy, because in the daytime you see 15% higher occupancy than these numbers also. But these patients are often discharged by the end of the day. So, this is how you can expect, the numbers to again double over the next 4 to 5 years from here. And at that point of time, you will see that, essentially we will be at that 70-75% level. However, at the same time, you will continuously be adding beds in terms of organic and inorganic capacity. So again, from that perspective, you will see that, the average will again come below 70%. So this is a continuous process.
Okay. Because I see very much value in our company as compared to other peers in our industry. So I like our company. Just like that. Just wanted to say that.
Thank you for the feedback. Thank you.
Thank you. The next question is from the line of Rohan from Invention Capital. Please go ahead, sir.
Hello, sir. Thank you for the opportunity again. So, sir, amongst the hospitals that you mentioned, the likes of Mohali, Jabalpur, so which of these do you consider mature and non-mature? What is the classification as far as the occupancy goes?
So I think based on the potential to grow in a given unit, based on the existing occupancy level, is how we determine that this is a significant growth area compared to, say, a hospital which is already at a 50, 55, 60% occupancy. We then consider it to be not a very high growth area, but maybe a consistent compounder from there on.
Right. So which one of those are ones where there's a focus of growth, where you see more space to grow?
Well, we see a potential, in different places of different things. But if you ask me, Delhi, Mohali, Jabalpur, Naroda are these 4 hospitals where there is significant possibilities of growth from here on.
Understood. And sir, the second question was over a longer term, say when the Sanar hospital scales up, what is the kind of EBIT margin that we are looking to do on the hospital business?
Talking about EBIT margin or EBITDA margin?
Yeah. EBIT margin, the segmental margin that you report. So what is the kind of margin that we are looking at the hospital business?
So hospital business, you can see we are ranging between 23 to 25%. Sanar is on the break even. If you will include the Sanar, we are ranging between close to around 21 to 22%. And as the things will progress, you can see that we don't have any debt into this our existing hospital, and we are not seeing any kind of major capex or a major debt will come into that standalone. But with the induction of Sanar, we are sitting at the debt of around 60 crores. So we are seeing that trend will continue of around 21 to 23% for the next financial year.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Dhruv Shah from Ambika Finecap. Please go ahead, sir.
Hi. I have a couple of questions. Is the 8 million guidance still stand on? Because then issue has to be really good for
Are you audible?
Sorry, can you hear me? Hello?
Yeah, we can.
Am I audible? Yeah, hi. Thanks for the opportunity. Deepak, I have a question, 3 questions on SAT. Does our 8 million incremental revenue still stand, the guidance?
For the year?
Yeah, because that's your guidance, right? 8 million incremental revenue on Shalby Advanced Technologies.
So 8 million incremental revenue for this year, right?
Yes. That's what I'm saying.
Yeah, we're gunning for that.
Sorry, I couldn't hear you.
Yes, it's still
okay.
Gunning for it.
Okay. And Deepak, the second question is the CKS Gold launch in Q4, which we are expecting. Are we due? Because we anyway delayed 2 quarters.
It's gone for the US FDA approval, so we're waiting for the US FDA approval to come through. So expecting the approval to come anywhere between December and January. So, but it's nothing. It's not in our hands. It's in the US FDA, and so it takes its time from a standpoint of approval and what they need in terms of tests and stuff. But from our side, we're waiting for the approval.
Okay. And Chennai, we are already on 200 crores of debt now, and with Ashapura's capex, which will start because now we have got the approval. What kind of peak debt are we looking at?
Look, prior to the PK Healthcare acquisition, which is the Delhi NCR hospital, we were sitting on about 80 crores of net cash. So, the position of that company was different. So we are at a debt of this level right now, primarily because of, the acquisition that we made. So that's the reason. From the perspective of the peak debt, very honestly, we would be comfortable at about, internally speaking, a net equity ratio of 1:1 or maybe 3 times EBITDA. But very honestly, we don't see ourselves going there. The reason being that we are already generating anywhere between 200 to 250 crores of annual EBITDA. So we feel that, and that number is also growing, on an annual basis. So I believe that our internal accruals should take care of a large part of these expansion plans. And if at all, we will have to take on minimal debt, going forward.
What was the capex for Ashapura?
So Asha Parekh Hospital in Bombay, we are looking at around 250 crores kind of a number from the investment perspective.
Okay, right.
That will again, be kind of spread across 36 months from the day that we file the lease agreement, with the charity commissioner. So from that day onwards, it will take 36 months, in a stage-wise manner.
Right. And when is that expected by? Because we had done a press release, right? We had got a charity commissioner's approval.
Yes. So the charity commissioner has approved it, and now basically the trust authorities are working on submission of the lease agreement. So the charity commissioner, in their order of approval, told the trust to submit the lease deed to the charity commissioner's office within 6 months of the date of the order. So the trust at the moment is working on completing the lease document, and soon they should be able to submit it to the charity commissioner's office. After which, we will be getting the handover of the premises.
Okay, fair enough. Deepak, one last question from my end. Congratulations, first of all, for reducing 30% of your cost from $109 to $77. That's really appreciated. Do we have any further room to reduce this from $77?
Yes, we have, and we're working towards it. So it's a multiple function of raw material coming from vendors and also improving some more efficiency in our plant. It's an ongoing task, right? Like how sales is an ongoing task, even COGS is an ongoing task. So we're on it. But there is.
Okay, great. Thank you so much for the opportunity, guys. All the best.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Jigar for closing comment.
Thank you everybody for joining the call. We will connect again into the next quarter. Apart from that, if you have any questions, you can reach out to our investor email ID. Thank you. Happy Diwali.
Thank you on behalf of Elara Security Private Limited. That concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.